Okay, welcome everyone to EPSMomentum.com. Thank you very much for taking the time to listen to this presentation. We are going to go over stock picking and using the screener at the EPSMomentum.com platform. This screener is really advanced, but yet very easy to use. But it will give you, if you select the right fields, it will give you one of the best stocks that are in the markets at any given point in time. So really worth you listening to this, I think. And if you didn't get the previous session that aired a few days ago, you can view it again on our social platforms. But yeah, we went last time over the 360 view on the stock. So I will give you a little refresher on this in a minute or two, and then we'll go into the screener straight away. So let's go into the stock view. So what we are seeing here is what I call the 360. So here I'm looking at NVIDIA. There's a bunch of subcharts here that I will cover in a second. But let's go into first the chart that you see and the earning momentum piece. So the earning momentum is that score between minus 50 and plus 50. Obviously, greater than 0 is great. Greater than 20 is exceptional. So here we have NVIDIA and EM24. So it's obviously a big name and a good company, right? So how do we come up with that number? It was the subject of the previous video, but we go over earning per share momentum, sales momentum, free cash flow, and profit margin. We rank and score all these. We calculate the growth and the acceleration in those four metrics, and then we score it accordingly. So that gives us a very quick overview of how good a stock is. So 24 is definitely great, 11 is still great, 19 is great, and so on. So a couple of things to notice, and that was the point I made last time, is there's a period here on the NVIDIA where the earning momentum is negative, minus 12, 22, minus 26, minus 18, and minus 12. Then it goes into 22, 15, 19, 33, so really booming and pushing the stock up, and it multiplies by 4 in a time span of a year or two. So what we learn is how to spot these. So a couple of things, we do the 360 view. So the 360 view is, first we look at earning momentum. So we can see the momentum from minus 26, getting better to minus 18, getting better to minus 12, and then 22, now it turns positive. So that would be in that region a reason to go and really start looking at NVIDIA and as to why this is a good stock. Now, as I said last time, one would say it might be too late because it's already been rallying for 2 quarters before that. And that's why we bring, or we brought, and I explain, the earning estimates revisions. So that revision score is the analyst revising their estimates for the stocks. And you can see those estimates turning around progressively and then shooting up specifically on that day. And pushing the stock higher, and then from then the estimates keep being revised up, and it's a no-brainer. So this is important. This is what you need to watch to beat everyone by a quarter or two, right? Because here the fundamentals let you know here that it's a great stock. The revision score pretty much let you know around here. So about a quarter and a half before, where you have that increase in both earning per share and sales revision score that is starting to go higher up. The timing momentum here is just a green and red, very simple indicator. We can see tons of greens here, all being green and positive. We can see some periods of full green here. This is what you want to see. We can see even earlier. So if you had to rely on something, maybe the technicals are a good thing. So this is not just technical. There's average true range for the trend here. There's price acceleration on the earning momentum slope. This is the relative strength, so relative market rank that I've explained, and we can see at the bottom here. the power days. So these are all the P's that you see at the bottom that are significant standard deviation move and volume and price. So all of this is really telling you if it's a good timing. So we've looked at the stock. If it's a good one from a fundamental standpoint, then is it a good timing to get in? From an analyst standpoint, from a sell side standpoint, is it a good time? Or from some other metrics. So what are the other metrics? Well, the RMR is one. So the RMR is the relative strength, so which is here, the relative market rank slope. But this is the relative market rank curve, which tells you if this stock is one of the best in the market and what people invest in. So again, think of it as an investor who has to invest $1,000 into stocks. Which stock is he going to pick? Is he going to pick NVIDIA, AMD, Microsoft? Maybe split his investment. So in short, he will push some names, and these names will trickle up. And from a 1 month, 3 months, 6 months, and 1 year performance, they will either show up on the top or not. Here we have NVIDIA at 45, which is, well, below the mean. So not really, I mean, more than 50% of the investors are investing in other names than NVIDIA. So that's what it's telling you. So it's not in good shape as far as the relative strength. So that is something to know. And then finally, we looked at the buy side. What is the buy side investing in? So the dark shorts, or put another way, the shorts from the sell side or the buys from the buy side traded on dark pools. So the dark shorts level is high up and all of a sudden drops drastically and trickles up a little bit. But, you know, it looks like all institutions, hedge funds, asset managers have been out of the names or not trading much on the name. So that could explain that flat curve that we're seeing here, that it looks like NVIDIA is touching a ceiling here. So yeah, these are the metrics that we've identified as being the best. This is the 360. You get a buy side view here. You get a sell side view here. You get the overall market strength of that name here. So the entire market, retail, buy side, sell side, everyone trading the name. We have the technicals here that tells you exactly when to get in and out. And then we have obviously the stock price, but also the fundamentals here right on the chart with that number, that EM number. So again, very powerful stuff that we want to take to the next level. So the next level is obviously the screener. So I'll click on the screener here and I click on the filters and I will start filtering the names. So I can click on any of the categories here. I pick the categories, I pick the field, then the column set, then the filters, and then the result. So let's click, I can type the name of the field. So if I want to filter on market cap, I click market cap and I'd say, you know, first off, I want all stocks greater than $2 billion or 1.9 also. $2 billion. So $2 billion market cap. Now I have 1,788 stocks. Second thing, I want earning momentum. So EM, earning momentum. I want to make sure that that EM score is positive or getting higher, right? So I want that earning momentum to be greater than 0, for example, 0 to 37. 37 is the biggest number. So now I have 565 stocks. So right off the bat here, we started with 5,000 stocks. Now we have 500 stocks. So it's already 10%. We weed off all the stocks that are not in good shape as far as earning momentum is concerned, and also with decent market cap so we can find liquidity. Second off, I want the RMR. So the RMR is the relative market ranks. That's the strength that we have in any stocks. I'm going to be not too stringent here. I'm going to put a 65. So remember, the RMR is between 0 to 100. So 65 being pretty decent, not extremely stringent. You can put 70 or 85. But yeah, I mean, it's up there and definitely a good filter to put to see if investors are in. So now it's halves the universe again to 226. But we want the opinion of the sell side and the buy side. So the opinion of the sell sides are revision estimates of both earning per share and sales. So I put revision estimates from earning per share, for example, in value. You can do it in value in percent, but value is a good start because in percent, it's not so much the value that counts or the level, it's really the growth of it. So we have the ability to filter on the growth from the earning day, from 90 days ago, from 7 days ago, or for the full quarter. So I can say that from the earning day, I want that revision score to be positive. So maybe greater than 0.1. And that will give us all the positive revision score. We can see all the greens here being laid out. And now we have 153 names, another halving of our universe, which is great. And now we can go with this and start with this, which is the sell side, the overall market, the fundamentals, and what I want is the timing. So give me stocks that are in actual good timing. So timing momentum, I have two fields in the timing momentum. One is the TM score. So if it's, how many greens is there? 0, 1, 4, or 5. So there's 5 metrics. How many greens do you have there? And second thing, timing direction, right? You know, is it improving over the last 10 days or is it decreasing over the last 10 days? So that's the direction. So is it one more greens or one more reds? So what we could do is we could say, well, first I want let's focus on the timing momentum first. And I want the timing momentum to be at least a 2, right? And I want the timing momentum direction to maybe improve, right? So from 0 to getting positive. So now we have 65 names with timing improving. I'm gonna want to see the timing momentum and the timing direction. There you go. So again, summarizing, we have good timing, good stocks that are bought by everyone, and the sell side approve of that name. Now what we can do is we can look at the dark shorts. There's actually a full category called OTC blocks. And here you can say, well, I can either have the dark short percentile. So that would be what's the percentile that is currently trading at. So is there a lot of buy side going into the name or not? So what I can do is I can say, well, I want at least that percentile to be 60%. That's some good value of dark short flow going into the name. So let's see if we're not so stringent. We got 38 names. Perfect. So this is good. The other thing that I might want is filter on some metrics, some, let's say, P ratio, right? Or debt to equity, or ROE. So, you know, classic metrics here. So maybe if we go to P ratio, so I have to go back to the category, which is all, and then PE ratio. And then in P ratio, I can do the TTM, which is here already. P ratio TTM, trailing 12 month. And I can say, well, I want the P to be at least greater than 0. Guess what? There's some P's that are negative, right? So those guys are just not making any money. I mean, from an earnings standpoint. Or I can make it at least a 5 or at least a 10. I'm a believer that you know, higher PE is sometimes good because companies are actually betting on growth, and I don't want obviously too high of a PE, but it looks like here you don't have too high of them. We have a 60, we have a 23, we have a 39, so we're not getting too crazy here. So let's do 5, and we'll filter on PE, right? So we got 32 names, and the next question is, you know, I want to focus on names that also are close to their high. That's one thing that is important, is the distance to high. So I'll put the distance to high as a column here, just as an indication. I can see these names are already close to it, or not even, I mean, 6%, 5% too high. So these are very, very good names. So let's have a look. AAP, Advanced Auto Part. I can make that a little bit bigger. Okay, I get 51. Earning estimates revision is up. So this is one I want to avoid. I want to avoid the earning per share revisions being positive just from the beginning of the quarter, but in a downtrend. So what I will do is I will take that estimates revisions, so revision value, and I will make sure that the 90-day curve is at least positive, let's say 0.1. So at least over 90 days, I want to see those estimates going up. And here I think it's going to be, yeah, and then 29 names are out, or in, I mean. So Align Technology is one. We can see price getting higher, revision up. We can see good timing and improving timing. You can see dark shorts participation more and more. The RMR going higher at 67. So it looks good. The stock price is kind of heading down, which is not amazing, but maybe the distance to high filter could help there to without that. It's actually 6% distance to high, so it's not too crazy. So how do we go into all these names? So Bread Financials Holdings. Okay, this one looks amazing. Bank of Hawaii looks amazing. Okay, First Busy Corp, EQT. Right. So again, great earning revision, dark shorts increasing, RMR increasing, getting green, EM's 18. So really good names here. So which name do I pick? Well, you can run the score. That's what the score is all about. So click on score here. And once you're on the score, you are going to put your own criteria in there to make sure you score each of these stocks with your own metric, right? Actually, the distance to high here was 20 days. So actually, that's a typo. Let's do this, distance to high again. And here, the display is 20-day, but you can put 52 weeks, sorry, or 1 year. And same thing here, you can filter on 52 weeks and you can say, I might want to have at least the stocks that are 15% away. Actually, the other way around, from 0 to 15%. And I bet that will be pretty stringent, actually. Yeah, 26. Okay. Yes, and this is distance to high 52 weeks. Okay, good. All right, let's go back to a score because now we want to score all these guys on the metrics that we like. So distance to high is one of the things that is important to us. So yeah, you want to bet on that. Dark short percentile, yes, you want this to be the highest. The timing momentum is not really. It's going to be a 3 or 4 or 5. So I mean, it's not going to change the needle. The RMR is definitely important. The earning momentum is there and definitely important. What else do we want? We want the P ratio. So I'm not sure that the P ratio, the higher the better. Maybe it is, but maybe we can make it the lower the better. So we want cheap, but yet growing stocks with the highest earning momentum, and then the estimates as well. So let's pull up the estimates, revision estimates here, because we unchecked the value earlier, and we want the 90-day trending in earning per share revisions, the highest, the better. And now I can put my weights. So I can put like 10% here, 20% there, 30 here, and so on. Or I can put equal weight, and it will do 17 for all of them so that we end up with 100. I click on run, and this is what we're getting. We're getting the best stocks out there. So February Animal Health is one of them. The dark short is up to the roof. It's very high up there. The timing momentum is green. Earning momentum, so let me pull it a little bigger here. So we can see a clear rally. The stock has been down for a while, EM minus 16, and all of a sudden 3, 16, 19, 20, 21, 23. So really in that period, something changed. The analyst revisions was up and up and up. And big institutions got in. It created that rally. Then they exited here. So we can see that exit and that downturn. And then it went back in. There's more to it. And now they're pushing the name even further, right? So this is truly significant and a good sign for that specific stock. Okay. So let's say I have no clue what this company is doing and I want to find out. What I do in this case is the following. I click on the drop-down menu and then I launch the AI Analyst. So the AI Analyst will just go into the name and I can click on Investor Report and tell me what the company does, right? Global diversified animal health and mineral nutrition. Company funds developing, manufacturing, Main product offer 2,000 product line, animal health, okay. broad product portfolio, global reach with sales over 95 countries. Specific system threats are not detailed, and they provided investor via SEC filings. Okay, let's go into the SEC filings. So the last filings, the 10Q, I can see the 10Q on the side, and I can see the summary there. And we can have a look at the latest report. Key highlights include sales of $1 billion, up 12% from the previous year, driven by growth in animal health segment, alongside challenges from regulatory changes and market volatility. And then I can see the change from 1 year. Everything is up 12%, 15, 20, 41% in income, diluted EPS plus 40%. Management discussion, it's all good. Challenges and threats, it's all good as well. And yeah, we can see any corporate action and so on. I can go into the last earning call and see what the CEO said, the actual transcript, or I can have the summary. I can read the summary here and see what happened. So EBITDA increased 41%. Management highlight operational momentum, including seasonal MFA integration, stronger customer feedback, industry event like IPP, Barcelona leadership meeting, and so on. We can delve deeper into all this to look at the drivers. What are the actual drivers? What are the actual drivers compared to competitors? We've identified 3 competitors, and we can go over them. We can compare them, growth drivers per competitor, per segment. What are they competing with? On which segment? What are their growth? We can see their risk and challenges. We can see the analyst questions and concerns during these calls and what's going on with this company. So that really helps you go deep into the analysis of the company. So going back to our screener, we found that name, and then we have Vertiv, famous and hot stock, of course. And look at this. Look at this. Look at this. Again, a downturn. Analyst estimates revisions here, downturn, and all of a sudden it starts getting better. We have an EM -3. Look at that. This is beautiful. -18, -14, -3. This is getting much better. Then 3, getting positive. Then 9. Then 19, 2. Oh, there's a -5 here, so something happened. And then 3, -1, 4, 19, 19, 26, 25, and now it's the rest is history, right? So basically, you would have known around here at EM9 or EM3. Here, this is all red, so avoid letting you trade. But here, that EM9 is full green here with power days, powerful power days. Without repeating myself. And then you have the estimates pushing the name up. And yeah, and what we see is a rally. The buy side goes in, stays in, pushes it higher to 60% of the volume being buy side buying the name, maybe dropping a little bit and then pushing it much even higher up here. So that name is on fire, really. So Hasbro, Texas Capital Venture, Virtue, Renaissance, Align Tech, EQT. I mean, again, you can go and get into all those names. You will see trend, very powerful trend, and very powerful names that I hope you would find useful. Well, that's it for me. I just wanted to give you a quick view on the power of this platform, and I hope you'll have good usage. You can sign up; it's free to use with limited functionality, and then you can subscribe. And thank you again very much for your attention. And I'll keep you posted on the new stuff that's coming up. Thank you.